Atul Suri joins us. Let's take a conversation forward with Atul Suri, try and understand what he makes of this great start for 2022. Atul, good morning. Thank you for joining us. Atul, it's been a good start for 2022. Unlike what everybody thought that this would be a dull year, a volatile year, it's going to be a normal year. But the first 15 days of price action is indicating that we could be in for another exciting year.
Yeah, I think I don't know about the year, but it's very exciting. The fact is that this beautiful rally that has happened is in the backdrop of global markets which have been volatile. One is your whole EM basket where we are a subset of has done nothing. FI flows which had briefly turned positive have turned negative again. Coupled with that US markets are seeing volatile, especially in the tech space. So considering all those things, I think India is doing very well. And, I think we are pushing towards new lifetime highs. A brief underperformance that we had in December or so is getting caught up. So I think it's all in all a very impressive market. But I still am of the camp that, we are not going to have a runaway market. I think globally markets are going to pause or be range bound. Range bound does not mean that they will do nothing. A lot happens within ranges, and ranges also are large percentage moves. But what you are seeing is a massive churn that is happening globally away from growth to value. And this is very, very evident in the way the US markets are panning out. If you look at the movement of the Dow versus the NASDAQ, two very simplistic ways of looking at growth and value is that you see very, very divergent performances. So even in the Indian context, I think what you've seen in the last 15 days, that growth has taken a bit of a pause, and the value rally seems to be pretty strong. So in a longer time frame, I think that we are not going to be a runaway market. In this, you're going to see turns, you're going to see growth someday, value someday, and that's the kind of play that is happening out. But all in all, positive on the market, positive on the year going ahead, positive on the opportunities it's going to throw us.
Hello? So let's say at top of 2021 versus the top of 2020. Yeah, Atul. So my question is that let's say if you compare your portfolio, top of 2021 versus top of 2022, the top 5 stocks which you own, how many of the top 5 stocks are still same?
Right. So for me, at least 25 to 30% of my portfolio pushes to lifetime highs. Just to put it in sectorial or thematically, we are extremely overweight specialty chemicals. We have been towards the end of 21, it was a bit of tough kind of period for specialty chemicals. We saw them correct. But you'll see that in the first 15 days of this month, many of them have actually pushed to lifetime highs. And in fact, they've gone substantially higher. So there is a 25 to 30% of the portfolio which has pushed towards lifetime highs and higher. Yes, on the counter side, not everything can be a peach. You do have some spaces, especially the more defensive areas. Some of the FMCG plays, some of the consumer discretionary plays, some of the pharma plays, which are kind of struggling. But as I said, that this year is not going to be a one-horse theme. It's not going to be a one-way theme. I think you're going to have, phases when we all will going to get bullish about something, and it's kind of going to disappoint. And when we get really bearish about something, we are going to, be surprised on the upside. I mean, it happened in the Nifty, we were at 16,800. Things were looking pretty nasty about a month or 2 months ago. And suddenly where we are again pushing near lifetime highs. So I think that this year is going to see a lot more of that. You're going to see churn within sectors, within stocks. And I think it's the ability to be able to have the secular themes in your portfolio, which is really going to reward you. Just as I mentioned, specialty chemicals is one such area which, we are extremely overweight on. Another controversial thought process is tech. I mean, tech is getting beaten world over, but we personally think that tech is again a very big, large theme. And at Marathon Trends, we are not looking at a quarter or a year. We are talking about 5 to 10 years. And we feel that tech, if it corrects and as it is correcting, I think is going to also be a very interesting opportunity. And if you look at tech in India, it is very, very different from what is happening in the US. In US, you find that the hit a lot of the tech stocks have taken is to the extent of 40 to 50%. In India, we are more the services play. The company numbers that are coming out have been good. The narrative has been good. So I think that in this year where things are going to be up and down, sometimes it's going to be growth, sometimes value, sometimes this sector, sometimes that sector. I think if you still stay with the secular themes, the secular growth themes, I feel that you will come out as a winner by the end of the year.
So one is better off, let's say, buying tech versus IT, and you would say go for tech stroke IT rather than bank stroke NBFCs?
Again, at this point of time, it may not seem to be the right thing. But if you ask me by the end of the year, I feel I would be better off in technology. I still think that it is as a theme, a secular theme, which is a decadal theme. The thing that is really changing lives, changing businesses world over is technology. Whatever the business is, it requires backend, it requires services. And India, I think, is one of the biggest providers of these services. And I'm here to benefit, whether it is autonomous cars or whether it's online banking or whether it is any other theme that plays out, whether it is the metaverse or whether it is bitcoins. The back end work is happening in India. And I feel that Indian tech will be able to weather. As I said, there is going to be short term. Tech is out of favor right now. But I think by the end of the year, if I'm looking at a larger trend, I feel that we will be well off in that space.
When you say tech, define tech for us. While you've given us autonomous car, fintech, but you are a listed market investor, and in India, tech means IT services or those 4-5 companies which have gone public, whether it is Nykaa or Paytm or Policybazaar. How are you building up the whole tech component in your portfolio?
So I think for me, clearly it's services. It's for us, earnings is a very important starting point. We really are not investing in the thematic space or the innovation space. We have seen that whether it is you study the history of Tesla or whether it's Amazon or whether it's Apple, you realize that these are also great companies. They were thematic companies for years, but they really didn't do anything for shareholders. They were actually dog stocks for long periods of time. It is only when it translated to profitability, when the earnings came in, you realize that that is when the wealth creation happened. So for us also, whatever it is, whether it is the Nykas or the Paytms or whether it's the Infosys or the Wipros, we are agnostic to all that. Question is that, are you able to give me reliable earnings? Are you able to give me consistent earnings? And I think that once that comes in, you will realize that the shareholder gets rewarded. So at the moment, as I said, we see it in services play, and we find that there are some very interesting opportunities in the mid-cap IT services space, which have done very well and which continue to impress with the quality of numbers. And I think a lot of these which are going to emerge from being just mid-cap to the transition to large cap. And I think that will be a very sweet journey for us. It will be a low volatility trending kind of journey. And that's something which we look for. So as I said, whatever the sector is, ultimately it is earnings that drive prices. For sustainable price movement, you need earnings. And whether it's tech or any other sector, I think that is the principle that we continue to follow.
Good morning, Atul. This is Nantara. So since you're talking about tech and you also brought up Tesla, what about Motown and electric vehicles? Because, so much is being spoken about that. Now, if you just look at over the last few days, the weekend that is, Delhi government mandating Zomato, Swiggy, etc., to have EVs in their fleet. You've seen Hero Moto increase its investment in Ather. Tata Motors has anyway set up that big subsidiary with TPG. Is that a theme that you're looking at?
I think it's very interesting. But as I said, as a continuation of my previous question, that these are all themes, these are at plays, these are stories. Which company is going to be able to win the race? Fortunately or unfortunately, we are in a world where winner takes all. We all talk about Tesla, but we don't talk about many others that have also runs. So I think that the important thing is that which of these, whether it's a two-wheeler, four-wheeler, MCV, LCV, whatever it is, which of these ultimately translate into growth in numbers. And whenever that happens, I think that's when we are in, because to try to bet on themes and concepts we find are very, very challenging, very, very risky. I mean, for that, one has to go and look at the performance of the ARC fund, the ARC Innovation Fund run by Cathy Wood. I mean, a marquee fund manager who was the toast of town, ultimate storyteller, all the boxes ticking. And you can see that what she was or what the fund did a year ago and where it is today. So I think all these things which are not backed by earnings always run the risk of being a bubble kind of behavior. That fund may take back or pull back, we don't know. But the kind of volatility that you see, 50-60% drawdowns is not, which is what I aspire to give my investors. We look for low volatility trends. And for that, it's very important that whether it's EV or whatever story, it has to translate into consistent numbers. When the numbers come, the price behavior that happens is much more secular and much more solid. So that's how I view, that's my prism of viewing even the whole innovation and tech. And very fascinating. I will love it. I use those products. But the ultimate bet is going to be who's going to be the winner. Because in this industry, it is very clear the winner takes all. Whether it is retailing, you have an Amazon or you have a Netflix, the winner takes all, and that bet is ultimately going to be the rewarding one. That's what we are going to talk about. That's what we are going to remember. That's where the storytelling is. But the pain in the failures is tremendous, and that's something which I don't want to take. So I may be a little late. I may wait for the numbers to emerge, but I have noticed that even after the numbers emerge, the runway is long, and there's a lot of money to be made after that. In fact, the best money is made after that.
Okay, so you're going to wait it out to wait for all of this storytelling to become a reality. You belong to the camp that's been talking about creative storytelling. We've been hearing about that of late. Atul, what about metals? Look at the phenomenal year metals have had.
Absolutely.
Last week, again, coming back into the spotlight. Now with whatever's happening in China, outpacing expectations with the GDP numbers that are out there, taking the first rate cut since 2020. Commodity super cycle. How would you approach the metal pack?
No, I think metals is fascinating. That is something that interests me. Again, as I said, we tend to be a little late to the party, but sustainability of earnings is important. And in metals, what you are seeing at it's translating into numbers. These are companies which are coming out with spectacular numbers, and the whole debt issues and all other issues that are linked to poor cycles actually are out of the way. And that is something which really interests us. Now for us, the call or the question is that which of these numbers and how sustainable they are. Commodities do tend to be volatile. They do tend to be, but just as you mentioned, super cycle, and super cycles are not 1 quarter, 2 quarters, or 1 year. They tend to be multiple years. And if these stocks are able to benefit from a super cycle, then I think that there is still a long runway. Metals is something which I definitely am interested. We are looking at a few stocks, but for me, the important thing is beyond how sustainable they are. If we feel or get convinced that there is sustainability, the trend is long, it is a super cycle, then there's no reason why we should not be in it.
Would you start creating shorts in your portfolio? You have that advantage of going short as well. Would you go short in stocks where you think that either it's price or valuation, or maybe a combination of both, which could work in your favor? If you sell now, buy later?
Nikunj, in the PMS universe, it's a very gray area. Shorting definitely is not on. Even hedging seems to be, the regulation or the practices or the intermediaries don't encourage us to do that. So from my fund point of view, obviously we don't have the mandate to do that. But as an individual investor, or just as a thought process, I would like to answer that question. That the fact is that, as I said, that this will be a year in which it is going to be a broader range. So when we get very, very bullish on something, you will find that we get disappointed. And when we get very, very bearish on something, it will be on the upside. So whatever shorts one would trade in the year to come, I feel would be rather quick, would be more what we call swing trades rather than trend trades. For anyone who's a trader will understand the difference in terminology between trend following and swing trading. So I think the year will belong to a swing trader. If this answer is for traders, and I think they get the answer, the difference is that the last year trends worked very well, trend following worked very well because we had a secular up move. In the year that is there coming, I feel it is going to be swings. Things that get extended to the upside may actually have a likelihood of coming down, and things that get very pushed down may actually have a probability of going up. So it's going to be a year of, I think, swing trading rather than trend following. I think for a trader, that is a very, very accurate answer. But for me as a PMS, I can't do that.
What are the 2 lines you would like to draw maybe lines in the sand, but for the Nifty
Absolutely.
for this year?
Yeah. So I think I would look at around 19,000 on the upside and maybe 16.5 on the downside. Again, it's a very broad band. You may say that's a massive percentage point, but the way the markets are, the kind of liquidity that there is, the volatility that there is, the bands will have to be broader. I personally think that these are not written in stone, but they're written in sand. So they will always be a little, overlaps or gets pushed towards the end. But I think that we would play out in a broader range. But in this range, you will see a massive churn in sectors. You will see that a lot of sectors going up the pecking order, going down the pecking order. And I think that's where, money will be made in the year to come.
Is this current leg of decline in tech, and we've discussed tech a lot, let's say
Sure.
Wipro or NHCL Tech, or whenever there is weaknesses in Infosys, will those stocks qualify as stocks you want to buy on every decline?
So I don't know about every decline, but as I said, that there are some stocks in the cap space, not the names that you mentioned, which we are looking at very closely. So as and when they decline, and the interesting part is that they're coming out with excellent numbers. So that really gives us the solidity or the conviction that even in the case they correct, they could be good buys. And the corrections that may happen may be more because of thematic or fashion or some sort of macro, because it's all linked to interest rates. We all know that the moment interest rates go up, the market moves towards value rather than growth. We saw that exactly a year ago. If you see Jan, Feb, March of 2021, we had seen a similar move of US bond yields, which had spiked, and there was a rotation trade. But come April, May, the whole trade actually turned and bond yields again regressed. And you will find that the whole tech or the whole growth went on to make new highs. So I feel that this could be a year of two parts. And we look beyond that. We look beyond a 3-month or a quarter cycle, because, trying to predict bond yields, trying to predict inflation, we like to talk about it. But honestly, it is very difficult to predict. I mean, we've been talking about don't fight the Fed, and Fed was saying inflation is transitionary, and now the actions are totally different. So, for all the narratives that we find that most people are just very good storytellers. Very few people have predictive powers as far as these global macros go. And, when we are not specialists in that, the best thing, Nikunj, is to look at companies that have very good earnings and which have excellent price trends. And I think that is when we combine it, we feel that we will be able to go through the ups and downs. This is going to be a year where not all months are going to be of outperformance. There'll be a few months of underperformance, outperformance. But net, I think in the end, the growth areas or companies that will deliver good earnings will actually stand out, because that is the basic premise of investing. Ultimately, we are wanting to invest in companies where there is accelerated earnings, and that is what translates to accelerated share price. You can't dissociate these two for too long.
Now, Atul, I'm sure if our viewers don't know, let's tell them that what an avid traveler that you are. And I guess you, like many of us, are now caged because of the Omicron variant. With that, I'd like to talk to you about the reopening trade. There will be, again, be revenge dine out, revenge travel. And, this will also be a time, like Nikunj was pointing at the top of the show, where, maybe you'll see fashion stocks start doing better. You've anyway seen the run-up in the QSR stocks, the hotel stocks. How would you approach that theme? And does that theme have more legs to rally?
So again, these things are really true, very true. And, when you look around, look at your own behavior, look at your friends, that there is definitely a desire for revenge buying. And it's like people going out and buying cars. Now you should go and see the waiting list for all these premium cars. Even premium holiday. I mean, like Maldives is more popular than Goa. More people seem to be going to Maldives than Goa, though the pricing is many times more. So, you're seeing this kind of revenge trade that is play out in many areas. Try to book a restaurant in one of the fine dining restaurants and a table, and you find that those are booked out for a week. So yes, there is this revenge trade playing out. But the question I got to ask myself as an investor, that what is a one-off revenge trade and what is a longer term trend? Because if it is a revenge trade, it's one off. How many times are you going to do it? Once, maybe twice. You can't keep on doing it. But as an investor, if I want to make money in the longer term trend, which is, oh, I want to look at companies with earnings for 3, 5, 10 years, then I guess I have to look what become permanent habits or which become part of the ecosystem where the consumer is going to go out and consume them again and again and again. So that is why a revenge trade may be a great trade per se from the stock market point of view. But if you're looking at secular themes, you have to really look at those businesses where there is behavioral change in which the consumer is going to keep coming back. And I think that is something which only earnings will tell us. Consistent earnings is something which we look at because they are ultimately going to give us that kind of consistent price moves.
Okay. And since you're talking about multi-year cycles, earnings justifying valuations, there is, of course, a theme which is never about months and weeks. It's always multi-year, and that is real estate. Even if you look at the operational updates that have come in from a Brigade or a Soba or a Macrotech that owns the brand name Loda, it's all looking good.
Yeah, I think it's very fascinating because, you know, if you look at the markets, you'll find that this is a sector which has been through a 10-year consolidation. I mean, you know, it's been 10 years where the sector hasn't done much, you know, barring 2 or 3 stocks which go up and come down. Really, no great wealth has been created by investors. And even these companies have struggled at the ground level. So definitely what will emerge are going to be few key players. And I think that they will have opportunity. But again, this is something like, you know, the EV trade that we spoke about or the auto trade that in the end, the question I ask myself is show me the earnings. You know, there are a lot of hope trades, there are a lot of things like that, but we are not traders, we are investors. And I ask myself one question again and again, if show me the earnings. And when the earnings come, we are in it. Because one may be a bit late, one may not get the rock bottom price, but the meat of the money is made not just being early, but in the middle section of the trend. When you start having companies which continue to perform well, give outstanding numbers quarter after quarter, and many of these quarters ultimately go on to make years. And you know, as I said, that we've gone and studied a lot of these global plays, and we talk about FANG stocks. You've got to go and see that. You go and see the history of Apple. Apple, I mean, is a marquee name. It's a case study. But if you go back and see, it has had a very, very checkered past. You know, it's had a very, very checkered past as an investor. And the fact is that the best money has been made very recently in the last few years. I mean, a case in point is the great investor Warren Buffett. You know, you look at his greatest wealth creation in absolute dollar terms has been Apple. And when did he buy it? Did he buy it at IPO? Did he buy it early? Not really. He bought it very, very late. But the kind of wealth that he has created, because we feel that once companies start to demonstrate numbers, the kind of wealth creation that happens there with low volatility is fantastic. And that's the kind of space I would like to be for my investors.
Great point. All right, Atul. Best wishes for 2022. Thank you for joining us.